Hey guys, Mike here. So another jam-packed video because we got a very interesting week coming up. We actually do have earnings and economic data we need to pay attention to, which I'll go over for you, as well as some headlines that just came out today, which the market's probably going to use to either push the market up or use it as an excuse to push the market down if it wants to, as well as something that's happening very quietly underneath the hood over the last week here that I'm going to show you, and it's something we definitely need to track and pay attention to because I think it's going to tell us what smart money is actually doing. And to start off with, these two headlines came out today, and the question is, which one is the market going to take? This one was Chinese cities ease COVID curbs in wake of protest. Obviously, that's been breaking out. And I know the city where Apple gets its production done at, they actually eased it as well, supposedly. And then the other one came out right behind it was manufacturing orders from China down 40% and unrelenting demand collapse. And if you look a little more into this, you can see Asia-based shipping firm HLS recently told clients it is a very bad time to be in shipping. China to U.S. container volume was down 21% from August and November, and Chinese factories are shutting down 2 weeks earlier than usual ahead of Chinese New Year, which is a big deal. And the reason why this is important is because Chinese stocks have been running like crazy. You can see they're heading up towards their upward channels. JD's trying to get above its 200 daily moving average. You can see Baidu's pretty far off from it. Baba, huge breakout of its channel. It's heading towards the 200. Neo, same thing, heading towards the top of that channel. And the XP has just been unbelievable. It's like up 90% in 5 days or some crazy mess, but it's still way down, right? And if you don't have one, make sure you create a folder wherever you hold all your stocks at to say which stocks are range bound, because I put these out to the members in the Discord and on the Patreon, telling them which stocks are range bound, because when they bust out of these ranges, it's usually a very bullish move, or if they break down and bust down through the range, it's a very bearish move. But it's important to understand, because as we start to move forward and all the bad news gets priced in and the market starts to move, these stocks will start to bust out of these channels, and that obviously is extremely bullish, which is what you saw in the Dow last week when I showed you that video. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit that like and think about sharing the video, guys. And so we'll see which one they use. I thought the biggest part about that was manufacturing shutting down 2 weeks earlier than they normally do for their New Year. So we'll see how that affects things. Again, sometimes the market just don't care, but how it likes to look at these headlines where it'll cherry pick and go, that's why we're moving up right there, And so that's something to pay attention to, and pay attention to Apple, because Apple's the big one in the S&P, right, and the NASDAQ for that matter. So if they want to use that as bullishness and go, all right, their factories are going to open up sooner and it's not going to affect iPhone production, Apple to the moon, that kind of stuff, okay? And so another thing that's happening, that, kind of quietly and curious, and I don't know the reason for this, I kind of think I do, but curious to get your input, was I noticed starting in November, this was happening, especially last week, as we started to get towards that upward part of the channel, the descending channel for the S&P, that all of a sudden people started really buying risk-off assets, right? I mean, gold, those last 3 days, of course, has been moving up since November. They started getting into silver's had a great move, but look at the last 3 trading days, huge gap ups, right? Which is kind of interesting to say the least. And then the big one here, look at TLT versus junk bonds and HYG. TLT has been rocking to the moon, especially those last 3 trading days. But then look at what happened to HYG, which is high yield corporate bonds, and then JNK, which is junk bonds. And you can see they're trading sideways last week. So they get a rock ship and they started trading sideways, and people started moving into TLT, which of course is considered risk off because it's government bonds, versus the other ones are risk on. And for the members, I even put this under the DCA opportunity, dollar cost average, and gave them the reason why when it comes to TLT, because it broke out of its channel, right? Retested, still moving up, and so obviously there's a reason why BofA put this as one of their big investments for 2023. We'll see if that works. But I just found that interesting when you start to see that. And if you saw my video, what was it, Friday, how smart money was selling the stock market, but or is that where they're going? They're going taking the profits and putting it in gold and silver and government bonds and things like that. That's going to be the big question, right? And I'm going to show you a quick interview with Mike Wilson here, because he's Morgan Stanley's guy, right? He's called this thing almost spot on this whole year. And he called this rally on October 14th, right on. And here's what he's got to say, what he expects for December And then in January, February, he makes really, really great points. Real short video for you.
We've had two major, tactical rallies since June, the first one, and then, of course, one in October. This one actually has better breadth, which is kind of interesting. And so I do think we're closer to the end. I mean, we don't know when the Fed's going to pause. We think it's January. I think they do 50 in December, 25 in January, and that's it. Okay, that's ahead of where the market is. And the market's trying to pre-trade that, kind of like it did this summer. Now, we thought it was premature this summer to get in front of that. This time, we actually think there's validity to that. The question is, what are you going to pay for this thing if you think earnings are going to be really disappointing next year, which is our core view? So, we're trying to have our cake and eat it too. We like to do that, right? So we're having a tactical rally now. I kind of agree with Steve. We probably got some upward bias into year end, but ultimately the bear market's not over, and we got significantly lower lows if our earnings forecast is correct.
And that's really just the big question. No way to predict that, right? That's why you can never time a bottom or anything like that, because like you said, even this rally, the breaths are big, right? And I think we are going to break out of this channel and head up to 4150 probably. Who knows? But I mean, I can just see that happening. And when you look at the chart, you kind of see why here. That gap fill with us actually holding the 200 SMA, which is very bullish. We're sitting right there on that channel. It won't surprise me because 4150 lines up with the fib level of the 0.78 right there. And the RSI has plenty of room to run. I mean, this is a lot different than the one in July. The one in July, we got really overbought, right? And so it's a lot different where we're sitting at. I think we're probably going to come back. I think we'll break the channel, come back down, test that trend line right there that's bounced off of 3 times now, and see, and then before we start heading higher, and then see where we go from there. It ain't going to be smooth or easy, like Mike Wilson just said. I don't believe that either. But I think they're really more than anything just setting us up for this Christmas rally. I think that truly is what you see happening right now. And usually in the middle of December, it's usually like a lull. I don't know if people are starting to sell for their tax loss harvesting in the middle and then, winding it up for the December Christmas rally or not. And then another thing you look at is the NASDAQ 100. It actually has a lot farther that goes than the S&P. It's the one lagging all the indexes right now. And you can see it's got a gap fill right up there, which would be outside that descending channel. The 200 SMA is still sitting right there, about 6% away, as you can see. And so we're going to see if people will go into tech or not, or just keep buying S&P and Dow stocks, But again, the RSI has plenty of room to run. And I found this chart very interesting when I was looking at it. This is the weekly right here of the S&P and the VIX. And you can see the S&P since 2022 has been bouncing off of it and it's about to bust through, while the VIX at the bottom bounced off of this multiple times as well, but then it already has busted through this trend line right here of support. So, are we going to 16, 18 on the VIX? That's what we'll have to find out. But eventually there will be a spike back up if earnings comes out bad. I think that's what this whole thing is setting up for. And speaking of earnings, you can see right here I got them circled. None of these are going to move the markets or anything, but I definitely want to hear from Toll Brothers about the real estate market for sure on Tuesday. Go to Thursday. Costco stock's been getting hit right now. I'm not sure why. Not in that stock, but it's a big one. Lululemon, interested to see what they got to say. Are we still spending really? DocuSign, Chewy, are we still spending on pets? I know it sounds weird, but there's actually an indicator for this because people spend a lot of money on their pets, and I want to see if they're cutting back or not. And then the other one is Li Auto, which is, all the EV stocks in China have been on fire. And looking at, major economic data, I think obviously the ISM services index will be important. The factory orders will be important. Going down. I don't care about trade deficit. Wednesday, let's see. I don't really see any. Consumer credit, I think it's going to be a big one. 3 p.m. Thursday, initial jobless claims. People will be watching. Continuing jobless claims to gauge and see if employment is still hot. And then you have the producer pricing on Friday. These are going to be the big ones, right? The Michigan survey, are we still super bearish about what's going on in the economy? And wholesale inventories revision will come out, and we'll see if they change that or not. And with no Fed speakers to try to beat this rally down, that's another thing the market can use to say, okay, we'll just keep moving up or not. And I don't think it's going to be a straight shot anywhere, I think, because the bulls and bears are going to be fighting this thing out. I mean, you're going to have millions of dollars of options on one side, millions of dollars of options on the other. To push up and down. Calls and puts are going to be getting sold like crazy. I mean, if you look at this risk reward, it's a great time to short, right? I know people that are doing this, and this risk reward might lose it, right? But if you're looking at risk reward, this is it, right? When you get up against major resistance, it's usually the market goes down. But we'll just have to see. It's interesting because when I'm looking at it, looking on some of the weeklies and dailies, there's a lot of MACD bullish crossings happening right now. I showed you the RSIs still have room to run. right? And so when it comes to technicals, yeah, it sets up to keep going, really, is what it does. But again, you never know what the market's going to do, right? I mean, we thought Friday when that job data came out, for sure, when the market tanked in pre-market, we were going to be down all day, and it fought its way back, okay? And that's, I said you got to be set back and try to be data-driven, but this market right now, I don't think it gives a crap about data. I think this is more about the technicals than anything else, because even a hot job market report couldn't push it down. And just to let you guys know, one problem we have with the Fed, obviously, when your Fed president says the projections we're putting out aren't really worth anything, that's kind of concerning. You can't really put a lot of weight into them because, again, they have no idea. They've never been through this. They're just guessing right now. But the other thing is, even the data they're bringing in to make all these judgments on, it's concerning. I've read reports Friday about that job data saying, that one report they put out, it takes in, if a person has 3 jobs, one report just says, no, that's just one employed person, even though they have 3 jobs, right? Then the other one says, well, no, they have 3 jobs. That's like, basically, we're going to count those 3 jobs, not just as like one job, okay? And so it's just 2 conflicting type of reports going on. And so, and the argument is, well, hey, the 3 companies needed somebody to work, so you should count those as 3 different jobs. And some people say, well, no, it's just one person employed. They just have 3 jobs. I mean, how are you going to look at that? But, and the fact that I'm sitting there going, wait a minute, is anybody looking at the fact that one person needs 3 jobs? Like, is that not, and the biggest concern about those job reports is the number of hours, right? They're going down. They're steadily going down. Okay, that's how companies cut cost, right? And that's what they're in the middle of doing, is cutting cost. And so, I cut that down so far before you're actually going to start doing massive layoffs, okay? And so that's what the fear is coming in the first quarter. Nobody knows what the earnings are going to look like. Fourth quarter is going to be a big report, right? And then, of course, more importantly, the forecast for the first quarter. That's what everybody's going to be looking at come January, February when earnings comes out. But until then, we'll probably be sitting in some range of moving up one day, and then the Bears push it back down one day, and the Bulls push it back up, and this maybe is a slow grind, really. But we'll have to see. Let's see what's going on. Let me know in the comments what you think and everything. But all I can say is definitely be having your plan for 2023 of what ranges you feel comfortable going into what stocks. I think that's the key, right? Nobody's going to time a bottom. This could have been the bottom. Who knows, right? As people have said, the breadth is pretty strong, but if earnings comes out terrible, yeah, we're going to be definitely going back to the lows. I don't think there's any doubt about that. But right now, what the market's doing is saying, I think the Fed's going to stop raising rates in January, because in February they don't have a meeting scheduled. And so December 50, January 25 is the guess, like he said, and then that pause. And like I did a detailed video for the members on that, what happens when they pause and stuff, and then when the market sees a recession on the horizon. So it's important to understand. So do your research on that as well, okay? So anyway, I hope you guys some out of it. Hit the like, subscribe, and if you did, you want to join the membership, Less Than McDonald's combo right down there in the description. Love to have you, and I'll see you guys tomorrow.